Welcome back, guys. Apple stock technicals to watch from here. So stock closed at 175 today, all-time highs 175, 96 and 52 week highs as well, approaching that $3 trillion market cap. I think it's the first stock to reach that level. Let's have a look at the Microsoft just to confirm that news. That is it really the one leading right now? So yeah, correct. Microsoft at the moment is 2.5 trillion. So Apple, what to watch from here, how high it can go for the past like 2-3 days. So basically this week, Monday, Tuesday, Wednesday, we saw a lot of option traders come in for January expiration, December, end of December expiration, 175, 180 calls. And those are the very, very big sweeps that were coming in for the past 2 days, which drove the stock price higher. And from here, let's have a look. So let's switch to a daily chart. All right. So what do you watch when stock keeps making higher highs and there's no overhead resistance to watch? Well, sometimes when volatility is increased and momentum is to the upside, well, it's hard to tell how high stock is gonna go. But I usually go with standard deviations, where any time I see a stock in a short period of time try to go up 2 standard deviation or more, well, that's the level I consider as overextension. And I also look at the 50-day moving average, how far stock is trading above its 50-day moving average. So at the moment, let me pull up. So the 2 standard deviation move for Apple on a daily chart would be, and again, you can set up your standard deviations for different settings. Mine is for pretty much 21 days. And 177.50, that would take Apple to 2 standard deviation. The 3 standard deviation would be very, very extremely extended, would be 189 from here. So those are the levels I would keep an eye. And also maybe I haven't done a calculation, but you should keep an eye on $3 trillion mark. So from here, basically Apple has to go how much, like 5%. Do your calculation. So it's at the moment 2.8 something, and to reach 3 trillion from here, so another 100 and something billion it has to gain. So, and also moving averages, right? Let's take a look at the moving averages. So on my screen you see 200-day uptrending, good. The red line on my screen, and also the purple line is 100-day. And if you look at this yellow line, which is a 50-day simple moving average, and blue chip stocks, like big cap stocks like these, and there are only like 5 or 6 stocks that are worth 1 trillion. They don't like to get overextended. They don't like to go too far ahead of 50-day simple moving average. So at the moment, stock basically trading from its 50-day moving average, which is 151, 16% above, 24 points higher. Last time Apple was extended so far from its 50-day was right around here, and that was same thing, about 15%. And look what it did. It doesn't come crushing down, but it does take a break, chop around, reconnect with 50-day, and then you see the distribution maybe, and then you start to see another leg move up. So pretty much rests sometime there. Same thing right here when they announced 4-to-1 split, and then after earnings it just pretty much rocketed. It was last 2020 September when we had the decent correction as well. Well, stock was up about 30% above its 50-day moving average. So knowing those standard deviation moves, Well, let's measure how far would it be. All right, let's measure. Of course, these are moving averages. It's gonna move up as well as day goes by. Every day, it's gonna trend with the stock price going higher as well. But what would take the stock to, let's say, if this stock gets to, let's say 190, all right, so 189, 190, that would be 25% move from its 50-day moving average. So I'm not saying that this stock is going to get to 180, 190 or 200 by the end of this year, which is, we can take a look at the option activity and say, hey, well, this much stock is priced, option market is pricing for this stock to move. Okay, let's take a look. December 31st. So implied volatility is 32%, which is implying $11.50 up or down. So that means, well, yeah, you can expect stock to be up 11.5 points from here, which would take the stock to 187 if it goes up that much. But what's the probability of Apple by December 31st to hit, let's say, 185? Okay, then we can go take a look at 190 as well. 185, 20% probability of that happening, 21%. And 190 strike price, 13% pretty much. So if you're in the pretty much trading game and you are trying to play or chase the stock, that's how much, like, this is personally my method, which makes me, of course, I get nervous, and sometimes I am more nervous when I increase my sizes. But before I enter a position, I look up that the probability of that strike price that I'm buying short term or long term. I look at the percentage, and I pretty much program myself thinking that, hey, look at the numbers. So you shouldn't have more than 20% expectation that you're gonna make money. So, and then knowing that data, I put out maybe 500,000, however much I'm okay to lose, okay? And I'll be fine next day if I wake up and I'm down 90%. So that's how I look at it. If you do the same thing, well, that's the number. If you're playing this game, you should think of probabilities, and that these are the probabilities, all right, numbers. But as a pullback levels, let's take a look at the support levels that were resistances I was watching. So basically right here, if you look at, this is a daily chart. Stock was pretty much right here at 166, came down, broke out of that level, came straight right back down to this 158. And then we go higher, take out this previous high yesterday, close above it, and then today we test that level, that breakout level, and then go higher from here. So, and also another indicator, like to use more of a shorter term, would be 5-day. So stock is above its 5-day moving average, which is blue line on my screen. So whenever stock slips below 5-day, I usually hedge or go buy puts, trade it to the downside, or I just stay on the sidelines until it clearly shows me that, okay, this is a reversal. Also, on a daily chart, I looked at the MACD and I noticed that on a bigger time frame, there's a little bit of a divergence happening. Maybe I will switch to a weekly chart. Let's take a look at the weekly chart. On this chart, it will be maybe a little bit more clear. So the divergence is on a MACD. So what does that mean? So from split highs to these highs, look at the MACD. So, which is, well, that's what it is, divergence. So stock price is going higher, MACD is lower, which means this rally happening right here is happening with the lower volume than it did here in 2020. In 2020, this move was with much of a bigger volume, and right now, so when stocks go higher with a thinner volume, I'm not saying that this on a daily chart stock is trading with above its average volume, okay? So average volume for Apple somewhere here at 66, and for the past 8 trading sessions, it has been trading over 100 million. So this move right here, this volatility, I mean, overall market volatility increased as well lately, but it's going up, but relatively to the previous sharp move up, it's happening with a little bit lesser volume. That's why you're seeing the divergence, which is a sign like if you have a position, maybe at certain levels you have to hedge your position. All right. And when stock, like we saw right here, like I was very surprised to see that Apple like drop so much in a single day, which can happen. All right, out of nowhere, stock pretty much dropped 10 points in a day. So you can expect anything, but you should be prepared for anything as well. Like you hope for the best, be prepared for the worst, which means, well, when stock is making these kind of moves to the upside, that's when you try to be a bit cautious. When everybody's greedy, you have to start hedging. Again, not a financial advice. This is a little bit of analysis with a little bit of my thoughts. I actually think about a lot more things when I trade, but these are some of the basic things I keep an eye when I'm trading and when I'm trying to be rational when everybody is pretty much FOMOing and trying to follow the flows and just chasing the stock. So that's the Apple technicals to watch. Thanks for watching. See you in the next one.